Now, I'm going to be showing you some important things in this video. Again, we got a bullish inside day today, but the candlestick means nothing unless it gets confirmation to fall through. We have the hanging man that did get confirmation, but no follow through yet. We'll be watching that. And again, there's a discrepancy because, like I said, on Thursday, we got the hanging man, but yet momentum has turned back to bullish. Is that just going to be short-lived here, and then we resume the volatility, or is it sending us a message that with the 20 getting back above the 50, that hey, maybe this is it and that's done, and we just get a shallow pullback here rather than something deeper to test this low, deeper to test it, or maybe take it out. We'll be watching. There's a discrepancy in that we have that bearish candlestick and it broke down from a bearish rising wedge on the intraday charts, and again, momentum has flipped back to bullish here. So we're going to be watching to see how this unfolds. Red bar on the oscillator there on Friday. We got a green bar today. So again, I think this is a pullback. I don't know if it is done yet, and predicted it would happen. I'm not sure that we take out this low, but there are a lot of things that could produce some wild swings in the market. The CPI is supposed to come in cool. Powell probably going to be a hawk. Talking about inflation and tariffs. Going to be asked about him. You better believe he's going to be asked about it. Powell could rattle the market. President Trump could rattle the market with his tariffs. Not for the market to digest. Nasdaq was up 1.25% today. Again, and flip back to bullish. It's not making new highs though. Is it just choppiness here, and we get more volatility, selling off to go back and fill the gap here, or the presidential election gap way back over here? So again, just to be aware of. Oscillator's positive. Got the green going on here, the blue bars, but it's choppiness. So again, we're trendless at this point. Hey, I wanted to tell you again, I had moved my microphone. I had some issues with it the weekend. I hope I have it resolved. Went ahead and ordered a new cord. Anyways, I think I might have messed it up. So again, apologize for that if there were some snap, crackles, and pops. And a new one's on the way. So hopefully it won't be too bad until then. And hopefully maybe I've resolved the issue. I want to make you aware of that. Also, please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. Follow the link below to take you to a secured site. You can donate any amount you want. Take a moment to step up to the plate and help out. I would really, really appreciate it. I just ask that you do what you can to help out rather than sit here and get sponsors and try to sell you something. Is what most YouTube channels do to make their money. I don't choose to go with that business model. I don't want to sell you a bunch of stuff you don't need. If you could take a moment to help out, I would really, really appreciate it. Really be encouraging to hear from you. Thank you for your consideration for that. The weekly charts, again, we got that green bar on the NASDAQ. I told you again, could form a divergence or confirm a lower high if we're just going sideways. That still may move to new highs, and I think the jury is still out on that. That topping tail in the monthly time frame in December, we're still watching that. It's holding as a peak from the December high. But now we start the week with the second green bar, and again, this is what I was looking for. Our second green bar on the S&P. Again, we flip back to a bullish reversal of conditions in the weekly time frame surrounding the move off of the January low. We've been bullish now on the momentum here for 3 weeks. We're now trying to bounce off the 20-week moving average. If we get a bigger pullback, again, the trend line from the 2023 low may be tested again, but now our second green bar on the awesome oscillator. I think eventually we go higher, and over the next few weeks, I think we form this divergence, which could carve out here in February or March as we go higher. We have gone nowhere. We have gone nowhere since the election rally. We have gone absolutely sideways. So again, this buys the market more time because you have weeks and weeks of, and months now of just going nowhere. So again, we're likely consolidating to go higher that will end up forming this larger divergence. Will be a multiple point divergence with these other peaks and other turning points where we've had other sell-offs, but the next one we get when we go to the new highs, which is where I think we're going to those trend lines on the weekly and the daily chart, then I think we're going to turn off of those trend lines and complete divergences. S&P 500 weekly chart here. This is the spiders. I wanted to make you aware of this. I don't know. Momentum will stay bullish. We already had the bullish reversal of conditions when we had that bearish hanging man show up in the rising wedge. We had the hanging man on the daily chart and the rising wedge on the 60-minute chart. But you've got momentum trying to flip back to bullish. We have some sell signals here. We had a down day, but the bar is still green, reflecting the momentum here. So again, going to be watching. See momentum all flip back to bearish, just throwing back or back testing a bearish rising wedge pattern, or does bullish momentum allow us now to try to resume the advance and maybe clear the resistance zone? Again, this is we're still going to get a bigger pullback, but you can decide what you think about that. I think this low is still going to be tested. If our bullish inside day is confirmed to the upside, then maybe that cancels out the confirmation and follow through for a hangman candlestick. Momentum trying to turn bullish. This has happened before, though. Look, we tried to turn bullish here. Up here, had a rally, and then it failed, and we ended up, selling off further. So do keep that in mind. But momentum trying to flip, and we got that bullish reversal of conditions last week, Thursday. Now the momentum line trying to flip back to bullish here. Just mean though we're going sideways, which we are. We have other signals that are still on a sell signal as far as the momentum. So again, watching this closely, my guess is Powell's going to likely rattle the markets at some point tomorrow. He's a hawk right now. I'll show you the S&P 60-minute chart shortly, but the NASDAQ, again, coming up and slamming up into this trend line right here. Again, broke down from the rising wedge. Are we just getting a throwback? Do we get a bigger sell-off? It's what I'm watching on the NASDAQ is I'm watching the gap down here. If we take out the lows from the DeepSeek sell-off and from the tariff sell-off, do we come back and fill the gap here, 20,759? You have the presidential election gap here. Again, if NASDAQ stops making new highs, then again, we could see a bigger sell-off if we end up seeing rotation out of tech. But just something we're paying attention to as we're going into Powell's testimony tomorrow. NVIDIA helping the S&P today. NVIDIA helping NASDAQ up. It was up 2.87%, but we've rallied right into the 50-period moving average. You got the gap fill at 142.62 up here. But again, what it could be that we stall at this 50-period, and we're back testing this trend line right here. We're just under it. So again, pay attention to that 50-period. It's about to cross below the 100-period moving average here. So again, I believe NVIDIA's topped. But eventually, again, we could come back and fill the gap. We'll be looking at this. Might be more volatility before we do it. Risk is that NVIDIA comes all the way back down to the low 90 area and forming a large head and shoulders right here and right now. We fill the gap later. NASDAQ sells off further. I'm watching this trend line from the August low connected to our January low. Again, we do have CPI gap right in that area. Just below it at our 100 period should we break that trend line. If we come back here and we test this trend line, could go on. If we try to make new highs, again, I'm not so certain that NASDAQ is going to make new highs. Get a bigger sell-off, again, that election gap fill could be in play here at 20,227 near our 200 period moving average. So again, an important trend line I'm watching here, and we'll see what happens with that. So far, we have failed to move above the December high, and we got that topping tail on the monthly chart with our candlestick in the monthly time frame there. Not been confirmed, so we still may make new highs, but we are just getting chop and slop on the NASDAQ going sideways. The VIX down today, hovering here around the 50 period and the 200 period moving average. Going to be watching, does the stochastic try to recycle back up now, or again, does volatility fall? We got a bullish inside day on the S&P. The candle makes nothing unless it gets confirmed in a follow through. And on Thursday, the hanging man. So again, probably just back testing the down of the rising wedge. We're probably just back testing or getting a throwback towards it. That chart later. My count on the 60-minute chart. Are we just getting a throwback or a back test of the breakdown of the rising wedge? And we got that hanging man candlestick. Again, we went up, we hit the upper boundary, and then we turned back down. Are we just throwing back here, and then we're going to resume the decline and come down here? So again, I put a question mark here. Again, this is possibly the completion of an ABC move. It's possible that it's still not done. There are ways to count this if we get a deeper retracement. And watching closely, do we see that happen? And if we do, expect again the January low is going to hold. So again, I believe this is wave one. Wave two might be done here, might be a little bit more work here, or again, even come down to the CPI or the 78.6 Fibonacci at 58.49 or 58.43 for the CPI gap being filled. We'll be watching. If we do go and take out the tariff sell-off low right here, we could form a multiple point divergence. That's certainly possible. That is what ended up happening over here to give us a bottom. We had a rally, it failed, we went down, had another rally, it failed, and finally we went to a new low. Do we get something like that right here? Where here we had a low, another lower low. Do we get another lower low, or maybe the higher low and get something bigger? But we'll be watching to see how it unfolds. But a lot for the market to digest this week, with Fed Chair Powell's testimony, the inflation data, and then President Trump's tariffs. So a lot for the market to digest this week. But like I said, regardless of however it unfolds, again, I think we're going to go make new highs once this is done. But I do think that Powell could possibly rattle the stock market here. And again, sometimes his first day is up or down, and then the second day of testimony is the opposite. Similar to the inflation data. Doesn't always work out that way, but often it does. So going to be watching to see if there's more work to be done or not, or ready to start resuming the advance. Got a bullish inside day. We gapped higher. What happens with this gap? We gapped higher now. What happens with this gap? Do we get a lower high below this, another lower high, and we got a trend line coming in right there? Do we get another lower high or go a little bit higher towards that level and back test and then go down? I want to remind you, again, in the daily time frame, we got the 20 back above the 50. So the 10 and 20 are above the 50, and we still have the 50 here on the 60-minute chart, and that was a daily I'm talking about over there. Here on the 60-minute chart, the 50 is still above the 200, which again, so the crisscrossing back and forth of the 50 and the 200 is that we're either going sideways or now we're ready to resume the advance, maybe with a higher low or slightly lower low, but again, ready to likely resume the advance. So I'm looking for evidence that the correction, the pullback, is done. And that's what I'm looking for right now. Into the gaps being filled, we formed the bear flag and we formed the rising wedge. You can see it on the 60-minute chart as well. Again, throwing back now. We'll be watching to see what happens with our Fibonacci's. We'll be watching this low closely. Is this thing done, or is there more work to be done? We'll be watching. Regardless, don't lose sight of the big picture. Once the pullback is done, whether it goes deeper or not, we'll see. Like I said, I always tell you what I think, and I'm not sure if we're going to take out the tariff gap, the tariff sell-off lows here, I should say, from last Monday. I think there's a possibility that we do that, and so I'm just showing you the charts and you make up your own mind. But like I said, once this is done, we're going to resume the advance in all likelihood, in my opinion, and go to new all-time highs. Do sell off. This is a area of great interest to me with our 61.8 Fibonacci and our 78.6 Fibonacci and the S&P 500. Now, Friday we knew more tariffs are coming down the pike. Sunday it was announced that we're going to see either today or tomorrow an order signed, an executive order with tariffs on steel and aluminum, on all imports of steel and aluminum. And that does include Canada and Mexico with that order. So the tariff sheriff is back. Market shrugging it off today. We got Powell tomorrow, and then the following day, 2 days of Powell's testimony before Congress. It's probably going to be a hawk. Now, in addition to the tariffs on steel and aluminum, which is what we had back in 2018, by the way, if you didn't watch my video, we had those tariffs, and what happened? Inflation went down. It didn't go up. So again, these people telling us that tariffs are going to create all this inflation, again, just simply do not know history and believe a lie, something that's not true. The tariffs cause inflation. I don't like the tariffs. I'm no fan of these tariffs at all. But what Trump's doing is using them as a bargaining chip. They act as a consumption tax on the American people. And again, I think we have taxes high enough. Understand what he's doing, and Like I said, just because I don't like the tariffs doesn't mean I'm going to lie about it and say they cause inflation, because they certainly don't. Being told about that, and I think that will eventually lead to the inflation freakout later on after we get another push higher. But you got the tariffs, the executive order going to be signed today or tomorrow, and I don't think, I checked, I didn't see it has been signed, at least not so far that I can find anyways. But later in the week we're going to also get more tariffs. Trump announced on Friday this week he'll be announcing reciprocal tariffs later this week. So that is more tariffs. Watching for that. There was volatility associated with the tariffs around in 2018 and some in 2019, but like I said, inflation ended up going down, not up. More tariffs. So far, the market shrugging that off. We're going to get Powell tomorrow. We're going to get the inflation data. U.S. News had the headline that I think best captured what we're having this week. We have a crowded week for the economy. That's what's going on. We got a lot of things going on. We've got the tariffs. The tariff sheriff going to announce 2 new tariffs. So they'll be talking about Trump's tax cuts this week too, which might be a market mover. The market, again, Wall Street, they love Trump's economic policies, but they hate his tariffs. And that's really what it comes down to. They hate the tariffs because they believe they cause inflation, which they don't. I talked about that over the weekend. We're going to get Fed Chair Powell testify before Congress. So again, a lot going on this week. And then we're going to get the inflation data, the CPI and the PPI there on Wednesday, right before Powell's second day of testimony. Tomorrow we get Powell's testimony during the market session, 10 a.m. Eastern Time, first day of testimony. Expect Powell to be asked about the tariffs. Expect Powell to be asked about inflation. Now, I expect the first day of testimony, Powell's going to be a hawk. Now, sometimes is what you have happen. It doesn't always play out this way, but sometimes you've got Powell showing up as a hawk one day and a dove the next day. With Powell, you just never know what you're going to get because he's very fickle. I expect Powell's going to be hawkish his first day. We could also, again, see the executive order for the tariffs on steel and aluminum, and again, this could rattle the market. And I'm watching our tariff sell-off low from last Friday, and again, I think we're going to either get a higher low or lower low, and then I think it's going to be done. I'll show you. But expect that Powell is going to be, in all likelihood, hawkish. Expect the 10-year yield to rise back up with the tariffs and with Powell's testimony in all likelihood. Powell will have the CPI released before the testimony, before the stock market opens on Wednesday, on the 12th, for Powell's second day of testimony. So we'll be watching that. And then later, after the CPI is released, which is expected to come in cooler, again, 2.8 supposed to be that we see inflation drop on a year-over-year basis. Maybe the market likes that. 3.1 for the core year-over-year, 2.8 for the headline. Again, both lower than the previous readings on a year-over-year basis from last month. And then we're going to get the PPI wholesale inflation on Thursday, wrapping it up with retail sales there on Friday. We got NVIDIA earnings coming up in about 2 weeks on the 25th. Futures on Sunday initially gapped lower with the announcement on Sunday of the new tariffs on steel and aluminum, but the market it gapped lower, then it rebounded, and again we ended up seeing the S&P gap higher as futures rebounded overnight for the opening bell on Monday. The Dow was up 167 points, up 0.38%. The the S&P was up 0.67, up 40 points, still holding here above 6,000. NASDAQ up almost 1%, the Russell up 0.36%, and the VIX was down 4.41%. And the CNBC headline right here is correct. The S&P closes higher, NASDAQ pops up 1% Monday as investors shrug off tariff worries, and that's really what happened. Right now we have a Fed pause going on with our last FOMC meeting. The Fed making a massive monetary policy mistake by positing they should be slashing rates right now because recession is coming. They're too worried about inflation. They sure weren't worried about it in 2021 as it soared from 4, we got up above 4% in early 2021. We ended the year at 7%, and then we got to 9% in early 2022. And finally, they figured out it wasn't transitory. That's what the Fed does. They were worried about inflation then, or not worried about inflation then when they should have been. They should have been hawkish then. And now they're hawkish on inflation when they should be dovish because we're about to have a recession. The Fed continues to make monetary mistake after monetary policy mistake. Right now, ahead of Powell's testimony, ahead of the tariffs, which again may be, President Trump signing in the new tariffs on aluminum and steel executive order, maybe as I'm making the video. So far, I haven't seen anything about it, but it's expected to happen today or tomorrow. The Fed, with our next meeting in March, all the way to the June meeting, the Fed is expected to continue to pause. The Fed is expected not to touch the Fed funds rate, not to do anything. But the betting markets here with Fed Fund futures are betting that maybe by the end of 2025 right here, maybe we get one cut. This has been fluctuating between 2 and 1 and none. And now the Fed is, well, maybe we get one this year in 2025, or maybe it goes into next year, into April, and then possibly, and the percentage is not very high, possibly a second cut. But again, the expectation is that we're not going to get any rate cuts. And again, none of these numbers are above 50% here for this year or for early 26, when again, the Fed is about to slash rates because we're going to go into recession. You see, well, how come the Fed doesn't say they're going to do that? Because the Fed doesn't believe the recession indicators, and they're arrogant, and they believe they can micromanage the economy. That's why. Do this at every recession. They can tell us we're going to have a soft landing, the fairy tale, and then we have the recession, end up doing emergency cuts because they're blindsided by it every time. They were in 2001. They were in 2000 when the recession started in December of 2007. Every time. Well, how is this going to be any different? People telling us, oh, we're going to have a soft landing. Well, you got all these recession signals flashing, and every time we've had the soft landing, so-called soft landing before, you didn't have any recession signals flashing, and you were still in an economic expansion. That's why it's the big lie, this soft landing stuff, and most people don't understand that because they don't study these things. Anyways, right now, we're expected to get one cut for the year, or possibly not until next year, and maybe a second cut, possibly, but the percentages are not very high here. But again, this is going to be completely wrong, okay? This is the herd concerned about inflation. Powell's going to probably make this go to where it's go lower, or it goes back to zero again, where they're not expecting any more cuts. Now, Powell believes we're going to get all this inflation, concerns about the tariffs. The betting markets believe it here, and we also have bond market believing that as well, and that's why we've seen the 10-year yield soar, and it's probably going to turn back up with Powell tomorrow. When the recession happens, that Powell and the Fed are telling us aren't going to happen, and everybody on social media telling us we're going to have the soft landing. When it happens, the Fed is going to start slashing rates. Before the Fed slashes rates, the market will peak and it will start dropping 20%. That's what's happened in history. Will cut, the market will rebound back up to the Fibonacci retracement, get a counter trend, and then the bottom's going to fall to the stock market. We've got the 10-year yield trying to rebound here. We drop below the 50 period, and again, I'm going to be watching. Do we get a counter trend here right now, or go down to the 200 period or the 100 period moving average first? Also watching, again, I talked about this trend line. It was back testing right here. I told you again, good chance we're going to see market attempt a recovery surrounding that, and that is exactly what happened after the December sell-off. I talked about this at great length and detail. It's still possible we go up here and form a double top at this area into the resistance zone at the peak over here. I don't know that we have that happen, but again, we could see a rebound either here or end up going lower if we can recover with the CPI this week and then get it. We'll be watching to see how it unfolds. It can unfold a couple of different ways. I'm expecting. Now, again, I told you over here, I told you that we were going to sell off. I was correct. I told you over here, we're going to go lower. That was correct. I told you up here, we're going to turn down bear flag. That was correct. Now here, again, I always like to tell you what I think. I'm not so sure. I believe we're going to go back and test this low. I don't know if we get a higher low or if we get a lower low. Now we did reach the 50% retracement of the advance. We did back test as I predicted we would. And again, that could be done with an ABC move right there. Possibly done, but it could still be under construction. Still may see a larger retracement either to the golden pocket, as I've talked about, going back to the golden pocket here, and which is our 78.6 Fibonacci at 58.49 or 59.09, 61.8 Fibonacci, our gap fill, the CPI gap fill is at 58.43. I don't know if we go that low, but we still may have more volatility. So what I'm watching here is to see if we get a higher low or a lower low, and I do expect a test of this low right here. I think we're going to either get something like this, and then we come back up and go on our way, or we get something like this coming back down, maybe hitting this trend line again into the 61.8 Fibonacci near 59.09, or again possibly filling the gap at 58.43 at the CPI gap. We're going to get the CPI this week. It's expected to be cool. We'll see what happens. Wholesale inflation the next day. But again, I'm not sure. I believe that we're going to test this level some more, but I'm not sure if we take it out, get a higher low. Now, the bullish scenario is that we have a bullish inside day. Now, here's the scenario for the bullish inside day, that the bullish inside day is confirmed, and we've just had a mild pullback from this move here, and we'll resume the advance. But in order to do that, you've got to be able to come up here and clear the resistance zone. You have the peak here, and you've got the peaks over here, and you've got this resistance zone area. So we'd have to see the momentum have enough strength to carry us higher. Now, we did get the bearish hanging man candlestick, but as I said, at that same time, we saw the bullish reversal of conditions. And we've had really mixed signals. So what I'm going to be watching is, do we get more volatility? It may be we get volatility, but then calm down. We'll see what happens. So again, do we just have a mild pullback here and that's it? Or do we get a bigger pullback? It gives us a deeper retracement, but not taking out the tariff sell-off low. Or do we get a sell-off that does take out that low and get something, a larger Fibonacci retracement? That's what I'm looking at. But I do believe that the January low, again, I predicted that we bounce off that trend line. And if we pull back a little bit further, we'll slam into that trend line again. So maybe we see a little bit of volatility and try to bounce off that. If I zoom out a little bit further, you can see, again, we did fill that election gap right here. That's where we hit our trend line. We hit VWAP support there also. If we come back further, again, we may try to hit more VWAP support right here. Possibly back test the trend line again. We'll see what happens. And again, our 61.8 Fibonacci at 59.09, we'll be watching that. But you do have a bullish inside day. That is not confirmed. The candlesticks means nothing unless it's confirmation. It just might be a counter trend, and then we end up going back down and resuming the decline, watching to see how it unfolds. But the pullback that I predicted has happened. Maybe it's done. I think the jury is still out on that. And then that we predicted would happen, the bounce and the gap fill here, bounce off key support with our trend line off the 2023 low. That's all now happened. There might be more work to be done, but like I said, I think the January low is going to hold, and I think we're going to go and make new highs. Is that right here and now? And this is going to be marked as a low, or again, more work to be done. Let me show you if we do have more work to be done. An important trend line I'm watching. It's a trend line from the 2023 low. Again, this is the trend line that I used to call the January bottom. Again, I told you we're going to move towards it and likely bottom there. I told you that on January 9th and 10th. We bottomed on it the very next day and rebounded back up, and we got a reversal bar right at that trend line, slightly violating it, but we bounced off of it. Could we hit it again? We're right at the 20-week moving average. Last week, we're turning up right here, starting this week, gapping higher. Do we have more work to be done in here, or is that it? Again, I've made it clear. I believe that we're headed, this larger rising wedge in the channel, I believe that we're headed up into this area here. I think we'll see new highs, new all-time highs eventually, but maybe there's a little bit more work to be done. We'll be watching. I remain bullish in the weekly time frame in that I think we're going to go make new highs, and I think this is nothing more than a pullback for wave 2, or minor wave 5. Here's a trend line on the daily chart, again from the 2023 low. I've talked about this, and again, slightly violated it, bounced off of it. We had the bull flag. Down at the lows there, everybody got it very, very bearish. Told you again, the herd is getting bearish. We're bottoming out. They told us in December that we weren't going to sell off. Herd gets very bullish at tops, very bearish at bottoms. So again, the question is, do we go back and we hit this trend line one more time? Or is that it? Does the low hold there and we resume the advance now? Again, this is where I think we're headed, up into this area here, upper boundary of the rising wedge. The July peak connected to the November and December tops, I think, are pointing to the top. I think that's where it is. I think we've completed minor wave 4 in all likelihood here. I think we're in minor wave 5. The question is the subwave 2 complete already or not? Here's the rising wedge and the count up close. And the question is, again, we got the rally I predicted here in the bottom, around the 100 period. Do we test that 100 period again? We got the rally. We got the pullback I was looking for. Is it done? And that's where I'm not sure. Over here, I was sure we're still going to go to new lows. Right now, again, I'm telling you, I'm not sure if we're going to get a higher low or a lower low. Now, if we can rally, start clearing the resistance zone, then again, this could be done and we can start resuming the advance. Guess is that Powell's going to likely rattle the markets because he's going to be coming and talking about how concerned he is about inflation. Not concerned about a recession because he said that we've clearly avoided a recession. But we've got a bullish arrangement of the moving averages. You got the 20 now above the 50, you've got the 10 above the 50. So if we do get a bigger pullback, then again, I think this trend line could be tested. We came just shy of it. Look at that. Came just shy of it here. You can see it up a little closer on this chart. It could be that, again, we come back down to this level right here. It could be that we come back down and tag the 100 period moving average and tag this trend line and then go on our way up higher and get something like that. So again, I don't know if this is done yet. May have bottomed here, completing wave 2 with this right here, and we're now in wave 3. If so, the higher highs are coming, but it's also possible that we come back and we take out that low if wave 2 is not done. If we are in wave 3, we can still come back and get that higher low scenario and then go on our way as well. Again, that is still in the cards as well.